Hello everyone, it's Steve with Aptera Owners Club. A couple of weeks ago, I put out this video about the private investment round, so the Aptera's private preferred round. They were starting an investment round for accredited investors only, and as noted here, an accredited investor is someone who has a net worth excluding the person's primary residence of over $1 million or gross incomes exceeding $200,000 in the two most recent years with expected income levels of that in the coming and future years or $300,000 as a couple. So that's a fairly rarefied group. And from that private investment round, they had a webinar. Unfortunately, I was not able to attend, but one of our viewers sent me the slides of that. Now, the information from that webinar is confidential, and Aptera wanted to keep it confidential, so I want to respect them, and I'm not going to disclose any details of that. A couple of things that I can say kind of generally about that presentation was two things stood out for me. It looks like they have nailed down many of their suppliers that we are not aware of in the public, but it looks like a lot of suppliers have been lined up, which is good news. And it looks like Aptera does not have any plans of increasing their price at this point, despite the ridiculous inflation of the past year or so. I think every other car company, Rivian, Lucid, Tesla, they've all increased their car prices because of inflation, and was not going to be surprised if Aptera eventually increased their prices, and I still won't be surprised actually. But it looks like they are not making any plans currently to increase their prices, and they feel like it's still profitable for them at the prices that were set 2 years ago when they restarted the company. So those are the two kind of generalized things that I can say. I think there are no specifics. It was a very interesting webinar, and hopefully they will make a lot of the specifics available to the public over the next couple of weeks or months. Okay, but I wanted to kind of talk about the state of finances. We touched on this a little while ago, back when Redwood Ventures, which is a large venture capital firm, said that this was liquidity was going to be a crisis, and capital was going to be very hard to come by, and that startup companies needed to tighten their belts and reduce cash burn. Now, Aptera is in a tough position because they're trying to ramp production, and they are in a very capital heavy industry, which is manufacturing. So they do need capital. You know, they've raised probably about $50,000 over the We Fund round, and then their initial Regulation A funding rounds. And of course, I invested with them in the Regulation A round. I wish I would have invested in them in the We Fund round because that was very, very early on when they raised about $500,000 there. They got some injection of capital from Impala Ventures, but Impala Ventures is a very small venture capital firm, so I don't think that they invested a lot of money. You know, maybe my total speculation, maybe 10, 20, maybe even, maybe $10 million. I don't know, but it's not a lot. I don't think that it's like hundreds of millions of dollars, but I think they need hundreds of millions of dollars to actually scale production like they need to. You remember this release from June, so about a month ago. They retained Marathon Capital, which is an investment bank, and they wanted to try to raise about $200 million through Series B capital fundraising through Marathon Capital. That's looking for institutional investors. But the problem is that institutional investors are pretty risk adverse, and a startup firm that hasn't delivered any product is probably too risky for institutional investors. However, Marathon Capital is a clean tech investment firm, and they may have some clients that are interested just because Aptera is a clean tech and sustainable company. So just for kind of social reasons and philosophical reasons, some wealthy investors or institutional investors may want to invest in them, not for purely financial gain, but for ancillary benefits. So that may be one way. But anyway, it's going to be difficult to raise 200 million. I think they're hoping to raise about 75 million through this private investment round. I think that's also going to be very difficult, to find enough people that are accredited investors to give them an additional 75 million is going to be kind of a tall order, because I think a lot of these people have already invested in previous rounds, and I don't know how much of an appetite they have to invest, double or triple or 10 times what they've invested previously into Aptera. The other thing is that they have applied for this Advanced Technology Vehicles Manufacturing Loan, the ATVM loan. This was, if you guys remember, this was the loan that Paul Wilbur, when he first took over Aptera back in 2009, spent many years trying to get this loan. And at that time, it was written so that you had to have a four-wheeled vehicle to qualify for the loan. It was changed in 2009 so that two and three-wheeled vehicles could also qualify. And then it went down. Uh, it went down. It went dormant for many years. So this was started in 2008. 108 requests were made. 5 were approved, and the 5 that were approved were Ford, Nissan, Tesla. So Tesla got $500 million from them. Fisker got 192 million. They defaulted, and the government was able to recover 53 million of that, but they basically lost 150 million dollars. And then Sierra Technologies was given 107 million. That they defaulted as well. So they've had 5 loans given out through this program. 3 of them were successful and they were repaid. Ford expects to pay back their loans by 2023, which is next year. Nissan repaid the loan in 2017, and Tesla repaid the loan in 2013. So 3 out of the 5 were successful loans, 2 defaulted. So their track record isn't great. It was, they talk about some of the unsuccessful requests. So this was Aptera Motors. Aptera Motors, the first time around, did not get it, and that's why they were counting on this loan to fund them, and then they became illiquid, and they had to liquidate the company and shut down operations. Bramo, if you remember, it was a electric motorcycle company, and they made this bike called the Inertia. It was actually a cool motorcycle, and they asked for 45 million. They were rejected. They eventually were bought out by Polaris. And then I think Polaris sold them off to some other company. I don't remember. Maybe you guys remember in the comments if you guys were following Bramo. They had really cool motorcycle. I actually wanted to buy their motorcycle for a little while. But the loan program got restarted, and they revived the loan program, and Aptera has applied for a loan in the range of 100 million to 150 million. So there's 3 sources of money that they're looking at. So they're burning cash right now doing their development. They've raised about 50 million, which seems like a lot of money, and then they're trying to raise about 75 million through this private preferred round, then trying to raise 200 million through Marathon Capital, and then trying to get 150 million via this government loan program. So they're looking at trying to get close to about $400 million, which seems like a lot of money. And I don't think they need all of that, but I think they need at least one of these things to go through. So like if they don't get this loan, and Marathon Capital does not raise 200 million, and they can't raise 75 million through this private preferred round, I think we are probably in dire straits. If one of those goes through, I think that we can make it work. The reason that if they have more capital, it's better, is because they're trying to get supplies from their suppliers, and if they have more capital, since they have, they're coming up on almost 30,000 pre-orders. So, if you suspect like 30% of them will go through, that's at least 10,000 orders. Right now, if they don't have very much capital, they can probably only order parts like 10 to 50 at a time. And then when they get those paid, then they can get more. And so they can't ramp very well. And then also you don't get the economies of scale. Like if you order like thousands of parts, you're probably going to get a better deal than if you order tens of parts. Like if you order 5,000 shells, you're going to get a better deal than if you order 50 shells. Or if you order 5,000 motors, you're going to get a better deal than if you order 50 orders. And also, you'll have the inventory to ramp quickly. So the more money they can raise, the faster they can do their ramp. I'm hopeful that even though they are capital constrained, they can still deliver at least a few hand-built vehicles, and then that'll show that they can deliver a production vehicle, and hopefully that will get institutional investors or a big investor to chime in. I mean, I think that's what they really need is they need a big investor to pump in like a few $100 million, just like Amazon did for Rivian and Saudi Arabia did for Lucid. If you look at this article from back in May of this year, it's talking about EV startups. Lordstown and Canoo. Lordstown has spent almost $1 billion since it was a public traded company, and they have not made it to production yet. And they're saying they need at least another 200 million to reach production. Canoo has spent 700 million, and they're trying to get another 600 million in financing, either through debt financing or through um, basically stock sales and diluting their current stockholders. That indicates they'll need roughly 1.1 to 1.3 billion to reach production. That seems like a lot of money. Tesla spent 1.2 billion, and that was like 10 years ago, um, when before there's been significant inflation, before they shipped their first 5,000 vehicles. So it's a lot. And then like Lucid has spent 1.1 billion, and they have delivered a few hundred cars. Nikola has spent 850 million, and they've delivered no vehicles. Fisker has spent 600 million so far, and they've delivered zero vehicles. So if you look at how much cash they have on hand, Rivian has about 2 years worth of cash burn. Fisker has about a year and a half. Lucid has a little over a year. Lordstown and Canoo have less than a. Lordstown had 1 quarter. I don't. Lordstown did finish their sale of their factory to the Taiwanese company, and so they've gotten a little bit of money. But Canoo just got a lifeline from Walmart just this past week, so they're still alive. But these guys are burning cash like crazy. And then if you look at Archimoto and Electromechanica Solo, they're burning cash at the rate of about 50 million a year. And Aptera has less than that on hand. So they really need to raise capital. So they are really hoping that they get this loan. And if they get this loan, I think they're in the clear. Or if they get enough private investors to fund them, they're in the clear. Or if Marathon Capital comes through. Now, the fact that this advanced technology vehicle loan has had over 100 applications and they've given out 5 and 3 of them were successful, and they just restarted it, that the success rate based on that is like less than 5%. So if you've gotten 5 successful applications out of 108, that's a less than 5% success rate on this application. So I don't know how likely they are to get this loan approved this time around. Because I think they don't go just by the by how great the technology is. They want to know that it's likely to be commercially successful, and they're going to get their loan back. And that's the same metric that institutional investors are going to want. And ideally, that's the same metric that accredited investors and these people are going to want. What they really need is they need someone that believes in them and has enough money that they can say, you know what, I believe in this technology, I believe in the company, and I believe in the product enough that I really want to see it come to market, and I'm willing to invest like $100-200 million of my own money, and I can afford to lose that. And that's what Amazon did for Rivian, and that's what Saudi Arabia did for Lucid. And fortunately for Tesla, Elon Musk put up, I think, $100 million of his own money, and then Mercedes-Benz put in $50 million, and then they got this $500 million from the ATVM loan. So that's how they funded themselves. So Aptera is, I think, this year, it is a very crucial year for them, not only in producing this Gamma vehicle and getting a vehicle out to production, but also they need to find funding to be able to scale production quickly so that they can become a financially viable company. Um, so if I'm really, that's why I kind of thought that this whole push for the Tesla plug would be a way to get on the radar for Elon Musk, and maybe Elon Musk, he's got enough money that he can, throw $100 billion, that $100 million easily. I mean, he was gonna buy Twitter for 44 billion. So compared to 44 billion, 100 million is kind of a drop in the bucket. Okay, so tell me what you guys think in the comments. I'd love to hear your thoughts on this. Do you think Aptera is going to find the funding to scale? Which of these three vehicles do you think is the most likely way that they're going to get funding? I'd love to read your comments. I like the discussion. Also, thank you very much to our supporting members. Um, really appreciate all your support. And thanks for watching and have a great day, everyone.